If you have spent months diligently saving up for your down payment, the absolute last thing you want to do is drain the rest of your bank account paying for expensive closing costs. Many first-time buyers in Richmond are completely blindsided when they realize that title fees, lender charges, and setting up their escrow account can add an extra $10,000 to their final bill. However, because the Virginia housing market is finally balancing out this year, we are successfully using a negotiation strategy called seller concessions to completely wipe out those out-of-pocket expenses for our clients. A seller concession is simply a legally binding agreement written directly into your purchase contract where the current owner agrees to pay a specific amount of your closing costs on your behalf. Instead of trying to aggressively lowball the seller on the asking price, a much smarter financial move is to offer their full asking price, but ask for a 3% credit back at the closing table. For example, if you are buying a $400,000 house in Chesterfield, you can ask the seller to give you $12,000 back at closing to cover your taxes, insurance, and loan fees. To the seller, giving you a credit is mathematically exactly the same as accepting a slightly lower offer. But to you, it means keeping $12,000 of cold, hard cash safely in your savings account. The only catch to this incredible strategy is that the home still has to appraise for the full purchase price, which is why you need a strategic real estate agent and a savvy local lender working together. Stop stressing about how you are going to afford both a down payment and the closing costs. Call RVA Mortgage Pros today at 1-804-212-8663 and let us structure a loan that forces the seller to pick up the tab for your closing fees.